What's good, traders? How is you all doing today? So the biggest question I've been getting in my DMs on WhatsApp, Instagram, and Telegram is how prop firms work. And today I want to give most basic explanation of how prop firms work, the rules that you need to take a closer look at, and just the basic information about prop firms. So the prop firm I use personally is Monevis. I'll put the link in the description if you want to check them out. They have some really cool features that I like, and maybe you like them. So yeah, the link is in the description. They also have a free trial that you can try a demo. Okay, you don't have to pay anything for that. So I have my some notes here just so that I don't forget anything. So first off, so what prop firms do is they fund you with their capital. You don't have to. They don't work like the normal brokers where you have to deposit your own money and then trade. They give you an account with a completely different broker than maybe what you're used to. Some give you the option to choose which broker you want, but most they just give you an account that is already made. So what you do is you trade on that account first. The standard way is you take a challenge. Phase 1 is the challenge. Phase 2 is the verification. So phase 1 is 8%. Phase 1 can be 8, can be 10. It depends on the firm, but it's around 10%. And then phase 2, 5%. Average, sometimes more or less, depending on the prop firm. But that's the standard. So if you pass that challenge and the verification, they give you now a real funded account. I would say a real funded account because how prop firms work is most of them they utilize the fact that most traders lose money, and so the money you pay before taking the challenge, if you fail, it's gone. You don't get it back. You don't get a second chance unless you pay another fee to start a new challenge. So most traders do that and they fail. So they use that money, part of that money that traders pay, to pay the profitable traders. That's the standard business model for most prop firms. There are some who actually give you a real account, but there are very few. Okay. Now, so once you get funded, you will be sharing profit with that prop firm. About the standard is 80%, but sometimes it's less or more depending on the prop firm. So the first you have rules, right? Once you start phase 1, you have some rules that you need to follow. So I'm going to mention the main rules. The first one, the main one, is the daily drawdown and the maximum drawdown or the overall drawdown. So the daily drawdown, mostly it's 5%. The standard is 5%, can be 3, can be 4, but the standard is 5. And you should not exceed this daily drawdown at any given day. It always resets every single day, but you should not exceed that in one day, 5%, if it's 5%. So so there are two types of daily drawdowns. There is the so hot. So there is the balance-based drawdown, the daily drawdown, which is balance-based, and there is the equity-based. Now the balance-based is they use the balance at the end of the day to calculate how much you should not lose the following day. And now, even if you have an open trade that is in profit or loss, they will not count that. They will only take the balance. Okay. Now that is good. Actually, that is the best form of daily drawdown because it's not easy to. You cannot fail the daily drawdown. You cannot breach the daily drawdown if you have an open position. But mostly the ones that have an equity-based daily drawdown, you will find that if you have a position, they use the equity or the balance depending on which is high. And you know that is dangerous because if you're a swing trader, if you're a day trader, you don't really care about that. But if you don't hold your positions, that is through the following day. If you don't hold your trades for long, you don't really need that. But if you're a swing trader, you need a balance based, because now if you're if when using that equity based, what happens is, if let's say you have a trade that is in profit, right? So they take that equity that at the time of the end of the day, let's say your trade is in 3% profit, right? They will take that 3%, and I mean they will take the amount, the dollar amount that is in your trading account at the close of the day, even if it's the equity. Now the problem is that if that trade goes back down into loss, let's say for example you are risking 1%, and they calculated the drawdown where the trade was in 3% profit and it's not closed, and then the trade reverse and hit your stop loss, that's 4%, right? The 4%, the 3% profit, and the 1% that you are risking, that's a total of 4%. Already during that day you will have lost 4%, as much as you are risking just 1% on that trade. So that's why you need a balance-based drawdown. Now the maximum drawdown is usually around 10%, and that's not really a problem. I think everyone understands that. You should not lose more than 10%. If it's 10%, if it's, some are 8%, some are 12%, but the standard is 10%. You should not lose more than 10% in on your account. If you lose that, you lose the account and you lose your money, and you don't get a second chance. So the profit target mostly it's 8% for phase one. The standard is 10, but some platform Monevis it's 10, but let's say the standard is 10, right? So you should hit that profit target without breaking any other rules. That's how you get to the next phase. Phase 2 is usually 5% profit, and then when you hit that, you get to the funded stage. Now there is usually a minimum trading days before you can get to the next stage. Let's say phase 1 to phase 2, phase 2 to phase to funded. There is a minimum trading days. Now there are two types. Okay, there are platforms that just ask for a trading day, as long as you open a trade during that day. Now how that works is you can open even a 0.01. Some do have restrictions on the lot size, but most is just open any trade size. Even if you open a 0.01 trade, that counts as a trading day. And if you hold a trade, let's say you open a trade today and then you hold it through tomorrow, only today will count as a trading day. Tomorrow will not, because you have not opened a trade. Now there are other prop firms that ask for minimum profitable days. Okay, minimum profitable days. Mostly it's 0.5%. So if you don't if you don't close a trade with 0.5% profit, that's not a day. It's not counted as a trading day. I mean as a profitable day. And if you, let's say, you open a trade today and then close it tomorrow with more than 0.5%, only tomorrow will count as a profitable trading day. Today will not, because you did not close a trade with you did not end the day with 0.5% profit or more. So what's the next thing? So there's also the trading restrictions that they have. News trading, some platforms don't allow you to trade through high impact news. You can get high impact news on most of them use forexfactory.com, but personally I use my FX book. It's almost the same, and so you should not trade news. Some of them have a window, like when we have, let's say, NFP or CPI, like the other day, was it yesterday? The day before yesterday, we had the CPI. So you cannot trade during 2 minutes, sometimes 2 minutes, depending on the prop firm, can say 5, some say 1, some say 2, but 2 minutes before and after the news, you cannot place a trade. And some of it even go as far as saying if a trade is closed during that window, they don't count it when they're giving you a payout. So, and mostly these new trading rules apply during the funded stage only with most platforms. During the phase 1 and phase 2, they don't really care. But once you get funded, that's when now they start putting more rules on you. And by the way, these platforms are designed for us to fail, to lose, obviously because of the business model. So you have to be good at trading before you can think about getting a prop farm account. You will lose a lot of money if you don't know how to trade, if you don't know risk management. Actually, you don't even need to know how to trade too much, but you need a lot of risk management. You can use these platforms to learn how to trade because you have restrictions. It's not like a personal account where you can do anything you want, but I think you need to manage your risk properly. Also, with trading restrictions, some of them have what you cannot or a gambling rule. Let me call it a gambling rule. You cannot go all in on a single trade. They don't allow that. They can say they allow that, but once you get to the payouts, once you get to the time to request a payout, they will not give you that payout because you risk everything on a single trade. So yeah, that's one of the restrictions they have. There are more restrictions, but I won't get into that. I'm just going through the main ones. So once you're funded, you have the profit split. Mostly it's around 80% of the profit. It can be less, can be more, depending on the prop farm again, but the standard is 80. And you will be requesting that payout sometimes once every 2 weeks. With most prop farms, is once every 2 weeks. Some it's 1 week, 30 days, but most it's once every 2 weeks. And there's consistency rules. Each prop farms has their own consistency rules. Okay, and some of them don't, but most do. Okay, you have to be consistent with your lot size. Let's say you cannot open today you're opening a 0.5%, 0.5 lots, then tomorrow you're opening 5, following day 10. Some of them don't allow that, so you have to be consistent with the lot size. And also some of them have restrictions on the profit. For example, you cannot have all your payout coming from just one trade. Okay, you cannot have the entire payout coming from one trade. Some even go as far as giving a percentage. You cannot have 40% of your payout coming from one trade. They have to be distributed. So those are some of the rules that prop farms have. And like I said, these prop farms are designed for us to fail. So you have to be good, especially at risk management, because if you manage your risk properly, you can survive actually, even if you don't know how to trade. But yeah, I don't think there's something else I have not touched on. Some of them don't allow you to hold trades over the weekend. They give you a time when you should have closed your trade before the week ends. So I think those are the main rules. If you have any questions, you can reach out to me on WhatsApp. My contacts are in the description, and yeah, I will be happy to answer you. I might even make a second video if this will not serve the purpose. Yeah, man, I'll catch you guys on the next one. Peace.